Picture this. It's a quiet Thursday morning. You're sitting at your kitchen table, a cup of tea going cold beside you, and your fortnightly payment has just landed in your bank account. You check the number, you make sure the bills are covered, and you close the app. Now, what if I told you that right behind that deposit there are up to 4 separate buckets of money that Services Australia may be holding in your name right now, and that nobody from Centrelink has called you, written to you, or knocked on your door to tell you about any of it? One of those buckets alone could put over $5,700 back in your pocket every single year. Another could unlock a lump sum sitting in the ATO's ledger, tax-free, tied directly to your name and your tax file number, left over from a job you may have completely forgotten you ever held. And almost $19 billion in unclaimed superannuation is sitting in a national pool right now, waiting for Australians to simply come and claim what is already theirs. By the time this video is finished, you are going to know exactly what these 4 entitlements are, why the system hasn't flagged them for you, and the specific steps to check whether any of this money belongs to you. This week, before you do anything else, G'day Australia. I'm James Walker, and welcome back to Pension Guide, the channel where we go through the age pension, Centrelink, and MyGov, so you don't have to figure it out on your own. What we're covering today is something I've wanted to sit down and talk through properly for a long time. 4 specific, documented legal entitlements that are chronically missed by Australians born before the 1st of January 1958. That means anyone who has reached or passed the current age, pension qualifying age of 67. 4 buckets of money that most people in your situation have never had a Centrelink officer sit down and walk them through. Not once. I spent years in the pension advice industry before I started this channel, and I can tell you with complete confidence, what we cover today could genuinely be the most financially important 20 minutes of your year. Now, before we take a single step further, if this channel has been useful to you or someone in your family, do me one small favor. Hit the subscribe button below and tap the bell icon. Centrelink does not send you a personal letter every time a threshold shifts or a new entitlement becomes available. This channel does that for you. It's free. And it means you'll never be caught off guard by a policy change again. Right? Let's get into the money. Here's the thing. Most Australians don't understand about the social security system. And I mean really understand deep down until someone explains it properly. When you first applied for the age pension, whether that was 2 years ago or 12, a Centrelink officer took a snapshot of your life on that specific day. They looked at your assets, your income, your living arrangements. They stamped your file, set your fortnightly rate, and from that exact moment, the system locked in and kept rolling forward at that pace like a conveyor belt that never stops. Now, you might think, surely Centrelink would let me know if something changes. They know my age. They know my tax file number. They know what's in my accounts. But here's the reality. The legal framework behind Services Australia operates on something called a self-reporting obligation. In plain English, the government builds the entitlement, puts it in the Federal Gazette, and then sits back and waits for you to put your hand up and prove you qualify. If you don't ask, the money stays in consolidated revenue. According to data published by Colonial First State, approximately 1 in 3 Australians who check their eligibility end up qualifying for some level of pension or related entitlement they are not currently receiving. 1 in 3. That is not a rounding error. And for those born before 1958, the most hard-working, most self-sufficient generation this country has ever produced, it is precisely that independence that makes you the most likely group to sit quietly and assume the system has it sorted. It doesn't always, but that is what we are here for. So let's start with bucket 1. And I want you to stay with me on this one, because most people have genuinely never had this explained to them before. When your age pension payment arrives in your bank account, whether that's with the Commonwealth Bank, NAB, Westpac, ANZ, wherever you keep your money, you are not looking at a single number from a single source. What you're seeing is the result of a 3-part formula. And if one piece of that formula is misconfigured somewhere deep in your file, you could be quietly shortchanged every single fortnight, and the system would never tell you. As of the 20th of March 2026, the maximum full age pension for a single person is $1,200.90 per fortnight. But that figure is actually made up of 3 distinct parts. Your base pension rate, which is $1,100.30. Your pension supplement, which is $86.50. And your energy supplement, which is $14.10. For couples, you each receive your own base rate, a pension supplement of $65.20, and an energy supplement of $10.60, adding up to $1,810.40 combined every fortnight. Now, where does the trap live? It lives right inside that middle number, the pension supplement. Years ago, when the government rolled several old standalone payments, things like the telephone allowance and the utilities allowance, into that single pension supplement, pensioners were given a choice. You could receive it baked into your regular fortnightly deposit, or you could elect to have it held and paid out once per quarter as a larger lump sum, handy for covering council rates or the winter gas bill. A lot of people ticked the quarterly box back in 2016 or 2017, and here's what happens. A decade passes, a partner passes away, or a bank account changes, or your pension status shifts temporarily. That quarterly flag sits buried in your file. Today you check your fortnightly deposit and something feels off. It's $86 short of what you're expecting. You assume Centrelink is penalizing you somehow, applying some rule you don't understand. But in reality, your pension supplement is sitting in a digital holding account, waiting for the end of the quarter. And in some cases, where a bank account is closed or changed, it's bounced back entirely and is sitting on Centrelink's ledger uncollected. I know, logging into MyGov and navigating your payment history can feel like a lot. You're absolutely not alone in that, but this one is worth the effort. Here's what you do. Log into your MyGov account, open the Centrelink tab, and click on Payment History. Don't just look at the total deposit figure. Click through to the itemized breakdown and check that your base rate, your pension supplement, and your energy supplement are all showing as regular fortnightly items. If the pension supplement isn't there, pick up the phone, call the Older Australians line on 132300, and ask the operator one question. Can you confirm the current payment frequency setting for my pension supplement? That one phone call could uncover $86 a fortnight you have been quietly missing. Now, bucket two. And this is the one that genuinely frustrates me every time I talk about it, because it is so fixable, and yet so many people are missing out. Commonwealth Rent Assistance, or CRA, is, according to welfare researchers and housing data from the Australian Institute of Health and Welfare, the single most chronically underclaimed ongoing payment in the Commonwealth of Australia. Let me put some real numbers around that. If you are a single pensioner paying private rent, and your rent exceeds $154.80 per fortnight, the government will pay you up to $219.40 on top of your normal pension every single fortnight, completely tax-free. That is over $5,700 a year. For a couple, the maximum combined rent assistance is $206.80 per fortnight. So why are tens of thousands of eligible Australians not receiving it? Because of three myths that have quietly taken hold. And I want to knock them over one by one. Myth 1. I live in a retirement village, James. I have my own unit. I'm a homeowner. This doesn't apply to me. Listen very carefully. Under the Social Security Act, if you paid an entry contribution to move into a lifestyle or retirement village, but you are still being charged an ongoing site fee, maintenance levy, or service charge to keep your unit on that land, Centrelink legally classifies a portion of those fees as rent. You can claim rent assistance against them. Myth 2. I live in a relocatable home or a caravan park. Spot on. Exactly the same rule applies. If you own the physical structure but you pay a weekly pitch fee or mooring fee to a park operator, that is assessable rent. Myth 3 is the one that truly breaks my heart. Someone sells the family home, moves into a private rental flat in Geelong or Newcastle or Townsville, updates their residential address in MyGov so the mail gets delivered to the right letterbox, and assumes that because they typed in the new address, Centrelink now knows they're renting. They don't. Not unless you manually navigate to the accommodation tab inside your Centrelink account and lodge a formal rent certificate, a document signed by your landlord or your property manager confirming what you actually pay. Without that form, the rent assistance counter in your file stays locked at 0, permanently. Take Barry and Lynne, a couple in their late 60s living on the New South Wales Central Coast. 3 years ago, they downsized into a beautiful over 55s lifestyle community. Lovely little spot, good neighbours, community hall. They pay $210 a week in site fees. Nobody ever told them site fees count as rent. So for 36 months, $206.80 per fortnight sat there, sitting behind the glass, uncollected. When their daughter finally spotted it and lodged the rent certificate online, Centrelink started paying it immediately. But the strict back pay rules meant Barry and Lynne permanently lost the previous 3 years. That is over $16,000. Gone. Simply because one form wasn't filed. If you live in state-subsidised public housing, Housing NSW, Homes Victoria, rent assistance doesn't apply, because your rent is already capped. But if you pay a private landlord, a community housing provider, a retirement village operator, or a caravan park, please check your accommodation tab today, right? Bucket 3. And before we go any further, I want to be completely straight with you because this one is different from the first two. This is not free money. I am going to explain it to you fully and honestly because I think you deserve that. And because the alternative, a bank charging you 8 or 9% areas, is a far worse option for a lot of people in this situation. Here's what I see right across Australia in 2026. Retirees in Melbourne, in Adelaide, in Perth, in regional towns like Ballarat and Toowoomba, people who bought their family homes in the 70s and 80s for $30,000 or $60,000. That same home today is worth $800,000, $1 million, sometimes more. They are sitting on extraordinary wealth. But they can't eat bricks. Their fortnightly pension barely covers the private health cover, the council rates, and the electricity. Asset rich, cash poor. For these Australians, there is a federal government program called the Home Equity Access Scheme, which older viewers will remember under its original name, the Pension Loan Scheme, administered directly by Services Australia. And almost nobody knows it exists. Here is how it works. The scheme allows eligible Australians aged 67 or older to receive an additional fortnightly payment drawn against the equity in a property they own on top of their normal pension. The combined total, a pension plus scheme payment, is capped at 150% of the maximum age pension rate. For a single person, that ceiling sits at around $1,800 per fortnight combined. The interest rate charged by the government, as confirmed by Services Australia, is 3.95% per annum, compounding fortnightly. It does not need to be repaid while you are alive. The loan is settled from the estate when the property is eventually sold. And the no negative equity guarantee, written into federal law, means you, or your family, can never owe more than the property is actually worth. That protection is absolute. So why am I bringing this into a video about missed entitlements? Because major Australian banks have spent years selling commercial reverse mortgages to seniors at 8, 9, even 10% interest, while this federal government scheme runs the same facility at 3.95% with full legal protections, and it is barely advertised at all. If your hot water system dies next month and you need $4,000, do not put it on a credit card at 22%. Call Services Australia first and ask to speak to a financial information service officer about the Home Equity Access Scheme. It is a free consultation, no obligation. Good on you for staying with me, by the way, because Bucket 4 is the one that I think will surprise most of you. According to the Australian Taxation Office, as of the 30th of June 2025, just over $18.9 billion in lost and unclaimed superannuation was sitting across approximately 7.3 million accounts in Australia. The ATO describes this as money held safely on a government ledger, tied to real names, real tax file numbers, simply waiting for its owners to come and claim it. Now, every time this figure makes the news, younger Australians tune out. Lost super, that's for people who changed jobs when they were 25. But the data tells a very different story about who actually holds these accounts. The pre-1958 demographic is significantly represented, and the reason is simple when you think about it. The superannuation guarantee, the compulsory employer contribution, wasn't introduced until 1992. Before that, super was voluntary, patchy, and entirely paper-based. If you held any kind of employment in the late 80s or early 90s, there is a real chance your employer opened an account for you with a fund like National Mutual, AMP, or Colonial First State. When you moved to your next job or moved suburbs or simply got on with raising your family, that account went dormant. Under federal law, when a super account sits inactive and uncontacted for a defined period, the fund is required to transfer those funds to the ATO for protection. The money did not evaporate. It is sitting on a government ledger, tied to your name right now. And here is what matters most for anyone born before 1958. You have cleared your superannuation preservation age. You are over 65. The moment that money is located, it is no longer locked for retirement. You meet the ultimate condition of release. You can instruct the ATO to transfer the entire recovered balance directly into your everyday savings account, your Westpac, your Commonwealth Bank, your ANZ. As a tax-free cash payment, viewers of this channel have found $9,000, $15,000. Money from jobs they genuinely wipe from memory entirely. The ATO's Lost Super Search line is 132865, completely free. Or you can run the search yourself through MyGov in under 5 minutes. If you're finding all of this helpful, drop a quick comment below right now. Even just the word helpful is enough. It tells YouTube to put this video in front of more Australians who need it. There are pensioners out there this week who have no idea any of these 4 buckets exist. You sharing this video could genuinely change someone's year. Back to it, right? Here is exactly what I want you to do this week, not next month, this week. Step 1, log into MyGive, open your Centrelink account, and click on Payment History. Find the itemized breakdown of your last deposit. Confirm your base rate, pension supplement, and energy supplement are all showing as separate fortnightly amounts. If your pension supplement isn't there as a fortnightly item, call 1-32300 and ask the operator to check your supplement payment frequency setting. Step 2. Still inside your Centrelink account, click on the Accommodation tab. If you pay any form of rent, site fees, maintenance levies, or park fees, confirm a current, signed rent certificate is lodged against your file. If you've moved, changed landlords, or your rent has increased since you last updated Centrelink, go to servicesaustralia.gov.au or call 132300 to get it sorted. Step 3. Click on the ATO tile in MyGov. Select Super from the main menu, then Manage, then Search for Lost Super. The search sweeps the National Registry in seconds. If any ATO held super is found in your name, you can apply directly to have it transferred to your bank account or call the ATO Lost Super line on 132865, no appointment needed, no cost. Step 4. If you own your home and feel the squeeze between a modest pension and rising costs, call 1-32300 and ask to speak with a Financial Information Service officer about the Home Equity Access Scheme. Free consultation, no obligation. They will model the numbers specifically for your home and your situation so you can make an informed decision. Step 5. After this video, text or email it to one person, one friend, one sibling, one neighbour, one former workmate who was born in the 1940s or 50s. The quiet, self-sufficient people in your life are exactly the ones least likely to go looking for this. You forwarding this link could genuinely pay their power bill for the next 5 years. Now, before I sign off, and I mean this sincerely, you worked your whole life for this country. You got up early, you paid your taxes through boom and bust, you raised your families and you built this place, whether that was nursing in Hobart, driving trucks between Brisbane and Cairns, running a small business in Bendigo, or working the land somewhere west of Dubbo. Every single year, you contributed. The age pension, rent assistance, the Home Equity Access Scheme. These are not charity. They are not handouts. They are the architecture of a system you helped fund through your working life. They belong to you, and you should never, ever feel small for claiming every cent of what you have earned. Now, every situation is different, and what I share here is general information, not personal financial advice. For your specific circumstances, your assets, your income, your living arrangements, speak with a Financial Information Service officer at Centrelink. It is a completely free service. Most people don't know it exists. And those officers are there to help you without judgment, without cost, and without any obligation. If this video helped you, I'd be grateful for a like. It helps more Australians find this information when they need it most. Subscribe if you haven't already, and please share this with someone who could use it. And leave me a comment. Tell me which of the 4 buckets surprised you most, or whether you've already found something in your file you didn't know was there. I read every single one. Coming up next, we're covering what actually happens to your age pension when you or your partner moves into residential aged care. The rules are misunderstood by almost every family that goes through this, and getting them wrong can cost you dearly. That one is coming soon, and you do not want to miss it. This is James Walker from Suspension Guide. You've earned this, Australia. Take good care of yourselves, and I'll see you in the next one.